We got inflation data this morning, and I wanted to talk about TLT stock or TMF stock if you're trading that one. They kind of run hand in hand. The inflation data is actually kind of a mixed bag. We got some good numbers out of consumer prices, but producer prices are tending to move a little bit higher. The big concern is simple. Producer prices eventually turn into consumer prices. The big issue with consumer prices, of course, is housing. Housing pressures, price pressures have been sticky. Producer prices, ex food and energy, are starting to trend a little higher, although they're not really that high. They're about 2.38%. Still, it's moving upward, and that's causing people to say, what's going on there? So let's jump in. I've been buying TLT stock. You could be buying TMF if that's the one the ETF you're looking to get into. But I've been buying in on TLT stock. I think this is going to continue to move higher. The Fed chairman did have some remarks regarding interest rates. I'm buying into what he said. The market's moving. Let's jump in. We'll take a look at some TLT stock charts as well as inflation data. All right, here's a look at TLT stock, and as you can see, the big pop higher. TLT stock, the 20-plus Treasury bond on prices, not yield. Yields fell, and that's why TLT stock has moved higher, for those of you who don't understand the inverse relationship. So as interest rates move lower, TLT stock or TMF stock would move higher. This is as of, and I'm doing this at 0917 this morning. Yes, I am a veteran. There's still plenty of day left in the day. So, and I'm mountain time, so there's it's about 11 o'clock New York. There's still plenty of time in the day. This is the 3-minute bar. Here is headline inflation on CPI, and we've basically moved sideways. Not bad. Here's the thing with that. If the Federal Reserve leaves interest rates where they are for a long period of time, eventually headline inflation would get down to the 2% target. It would be a slow, long grind if they do that. I'm expecting that the Federal Reserve doesn't move until after the U.S. presidential election. I did see numbers this morning that the September meeting, their expectations moved from 44% to 51%, that there is a move down in that meeting. If you're going to do it in September, why not November? Because this would prevent any kind of conflict with the presidential election. The presidential election is on November 5th. There is a 2-day meeting, 6th and 7th, November 6th and 7th. So the Federal Reserve could easily lower rates then, should they be on course to getting where they need to get to. Leaving interest rates where they are would very likely have that happen. I've been saying this in many of the articles I post on my Substack or in my videos, that there's really no more growth, that employment numbers have basically kind of stagnated, and that's where your growth for incomes and expenditures would come from. Without that progressive growth, price pressures would probably moderate, but that's a long time. We'll see how that plays out. Here's a look at core CPI inflation numbers month over month. Big drop down from where it was previously. It's at 0.281% month over month increase on the core rate. All right, just multiply that by 12. Without compounding, you're looking at about 3.25%. Not quite there, but we're moving in the right direction, and it could easily drop below the 0.2 level. That does not account for compounding. As I mentioned, you're just taking a straight calculator, bust it out 12 times, 3.5%, but it'll probably drop below the 3%. We'll see how progressively the lack of income, employment gains and income gains would reduce price pressures. But it's all being driven by housing as the big sort of culprit. I start all of my analysis with the consumer. Government expenditures tend to be flatlined, so they're really not going to drive the economy too much. Businesses respond to the consumers. They don't just start building warehouses hoping, well, if we spur growth, then eventually people will buy stuff. They respond. They expand because there's opportunities. So I start all my analysis with incomes, incomes, year over year rate of growth. That determines expenditures. There's a very strong correlation between the two. Expenditures, as we can see here, that determines the rate of growth of core inflation. Now we're seeing inflation decline more and more. We're seeing expenditures move flatline sideways. Again, income growth is stagnating because we're at 3.8%, 3.8 to 1% unemployment. This is well beyond what would normally be considered full employment. So there isn't going to be big gains in employment, which means there wouldn't be big gains in incomes, hence expenditures. Eventually, we will see inflation numbers decline. But it's that housing that we have to kind of consider. Producer price index. So these are goods that producers have to pay. Eventually, they will pass this on to consumers. I think it was 2.38%, a little elevated. The number is ticking higher. This is sort of like, keep an eye on that, but it's not a big deal right now, but still keep an eye on that kind of thing. My take, eventually, supply chains would catch up. We will probably see unemployment numbers increase. Keep an eye on Thursdays for initial claims and jobless claims, continuing claims. If they start to move higher, that means progressively lower and lower inflation, including producer prices. So there should be your key indicator there. Here we're looking at the TLT stock 4-hour bar chart. I had started buying at 87.50, 88, 88.5 are my three levels. Bought a small, tiny smidge at 90, and I am not really considering buying any more at these current levels. I'm going to let this position kind of mature, if you will. I'm sticking in this position for a long time. Given where I think inflation's going, that eventually it grinds lower and lower. Eventually, the Federal Reserve will have to lower interest rates. The rate of growth of employment will slow, and the Federal Reserve is going to want to keep it propped up. Not necessarily give it accommodation to kind of spur it further, but keep the economy moving forward. At the same time, they've got to deal with that housing, so they're not going to drop their pants entirely when it comes to lowering interest rates. Housing is a huge issue. The supply and demand of housing is way skewed, and that's really kind of a problem, even though we have seen some rents moving lower. Bigger look at TLT stock itself. I'm looking for anywhere from, say, 112 to 125 on my position. Keep in mind, I bought in, my lowest point is 87.5. I'm thinking about adding a little bit more along the way, but I expect we'll probably see more sideways movement until the Federal Reserve gives us that indication, yes, we can lower interest rates. Then it's a matter of how much. That all depends on consumer. How much have they lost in this kind of push? So those are the things that I'm keeping a track on. I'm definitely keeping an eye peeled towards producer price index. I don't see it as a problem. I do see it as, that sure is interesting. Eventually, producers would pass those costs to consumers. The real issue, however, is still housing here in the U.S., and it will be a problem until it gets fixed. How that happens, probably high interest rates for a long time. We'll see how that plays out. Nonetheless, I did put together a written article on this. Make sure to hit the link for my Substack at the end of this video. There's also a link down in the description. If you're just finding my content for the first time, make sure to hit the like and follow button. I break down the economy and how that moves the stock market, and of course, in this case, TLT stock or TMF stock, whichever one you're trading. We'll see you in the next video.